Good morning, everybody. How are you all doing today? So today is November 15, and I want to do a quick update on EOS. I apologize in advance if my humor is not up there quite yet. It's about 7:30 in the morning right now, and my humor usually perks up around, I'd say around 10 o'clock in the morning, So you guys are going to get some more humor out of me in my other videos throughout the day. So I wanted to go over EOS, and these are some very important similarities that I have found. So I will keep this analysis fairly to the point, and I don't want to take up a lot of your time this morning, so expect about 10 to 15 minutes at most, okay? So usually, guys, I'm going to show you some patterns. I'm going to show you guys a few patterns right here, okay? When I say 10 to 15 minutes, you guys can automatically expect like 30 minutes, okay? That's usually how it is. Okay, so whenever a pattern breaks out of here, for example, this is what we call a falling bullish wedge, okay? When it breaks out, we usually take a target range that's equal to the base range of the wedge in there, okay? So if it breaks out, we see something like that. Now, another thing is, let's say we get the opposite. We get like a rising wedge, which is bearish, and we have something like that in there. What we do is we take the base range, where I usually gauge it by the moving average, and I'll show you guys a clear example. And I right click on this right here, I clone it, I bring it over, and I use this as a target for where it breaks out, okay? And also, another example is, let's say you have a wedge like this. Usually when a wedge like this happens, guys, let me show you a very clear example. Let's say it was on a downtrend like that, all right? It'll usually make 5 touches like this, 3, 4, oops, sorry. It'll come down, and then it'll go 1, 2, 3, and then 4, and then 5, and then it will go to the downside. And here, the way we play this one, let's say it was coming down already, right? It will usually resume its pattern. So we take where the average of the 55 moving average crosses over there, or not crosses over, but where it's in the middle of the point. We take a range like that, right? And then we use this as a target as well. Or if it was going to the upside, for example, right? If this was reversed and it was to the actual upside, it would look something like this, right? So it's going up like that, and then it goes 1 touch, 2 touch, 3, 4, and then 5. So this is what I'm talking about right here, where it's originally starting from the upside. So we would take a base range of the wedge right there, and then we would play it like that. So these are some very clear examples which you guys will see in my tutorial videos to come, all right? They're going to come in probably a few days, I'm guessing, because these kind of patterns are very popular for me to play. So I want to make note of this right here for you guys. Take a look at this, okay? So I'm going to draw where I see my wedge, where it meets to the 55 moving average. That's the big number I like to play. And then I'm going to draw that as well. Isn't that a pretty clear-cut example, right? Pretty clear example. And then what I will do is I will draw a base range right to where this wedge is, pretty much. Actually, I'll use a different tool. Right where this 55 moving average is, I'll draw a box like this. And I will expect it to break out and do something like that. Now watch this, guys. I'm going to draw a horizontal ray across there, and I'm going to zoom out for you, and look how beautiful that is, right? Isn't that amazing? That's quite amazing, I would say, right? Look at the symmetry. So that is how you play base wedges. So if I was playing IOTA back then, I definitely would have shorted it right around here. And surely enough, this base range of the wedge, where the 55 moving average is also the exact distance to right here. Pretty cool, right? Okay, let's take a look at some more similarities. Now we are going to go back and take a look at some very notable and key points. One key point is obviously right here. Another key point would be right around here, right, guys? Another key point is right around here. Now, let's go take a look at where we are in the chart. So these were some key points as well. For example, right here, right around there, and also here. Now let's take a look at how these are affecting it. So if you notice right here, We also had a little bit of resistance, right? Where the previous resistance was. And here it actually ended up becoming a very strong buy zone. And that's the buy zone that I was recommending in my previous videos as well, where $1 was a good range. And another key area is right here as well, where we see stalls, right? It pretty much almost touches it there. And then it also becomes a key area right here as well. And do you guys notice that this specific resistance was a resistance slash support where we saw this over here, right? So this whole area right here, actually, it was once a resistance, now becomes a support, which we broke through it. Now this area right here around 145 is the next major buy zone. And this one was a very key point. Once we break this specific high, we are going to shatter it and we're going to go even higher. Trust me, guys. I'm pretty dead on my analysis and I'm going to be very confident in it. So this is a key point right there. If we look much closer and zoom in, they're right around here, okay? You guys see what I'm talking about, right? So right here, the price is exactly $1.72, okay? I'm actually going to move this up to right where it is, $1.72-ish. And take a look at that. We pretty much just touched it. Now we're getting a little bit of resistance. Now what I'm getting to is now we are in this specific area of play, right? We are now in this area of play where this acts as a baseline support and this acts as a resistance. And of course the next area of resistance is pretty much around, we can say here, and also right around here. If you guys take a look on the numbers there, that's where it is. So I'm just gonna make a note of it. Actually, you guys can see on the left here, right? $1.72, $1.43. And now I want to show you guys another thing, okay? Usually guys, this is what I would call the start of my wave 1. And according to Elliott Wave rules, wave 3 is often the longest and never the shortest. And what that means is the wave 3 compared to wave 1 is usually longer than wave 1. Actually, not usually, it always is longer than wave 1 from my experience. And then wave 5 is sometimes longer than wave 3 or shorter than wave 3 or longer than wave 1 or shorter than wave 1. It all depends on the context, but wave 3 is often the longest and never the shortest. So now what I want to do for you folks is draw the same type of base wedge that we see. Would you guys agree with me? Right there. That is pretty much where our wedge is, okay? And now I'm going to draw a base range where the 55 moving average pretty much is, right around here. And now what I'm going to do is I'm going to drag it over, and we get basically a measured move. Actually, I'm not doing it right. I didn't get that key point up there, my mistake. Let's do that a little bit better there. And right around there. And what do you guys notice? Another measured move. If I do it more properly, I'm sure I can get it dead on right there. That would be dead on to me, right in the center of the 55 EMA. This box is exactly in between there. Drag it over, and that is pretty much a one-to-one move, right? So what I'm led to believe actually is that we're not even close to done this wave, guys, and there's a lot more room to move. What I believe is that this is basically the first wave of the third. And let me draw what I mean for you guys. So let me draw out some Elliott waves for you, okay? For every impulse move up, there's always going to be 5 impulse waves like this. I'm going to stretch it out a little bit more so we got more room to work. And now within each wave, we will always have 5 waves like that as well, okay? So there you go. You can have 5 waves like that. So within one big wave, there could be 5 waves. And then within even this wave, there are waves within waves, right? Just like that. And then within this third wave right there, And we're talking about waves inside of all of them. There could be even more waves. Don't mind the angle. I'm just trying to get to the point so you guys know what I mean. Do you see what I mean by that? So this is one big wave, and then we have 1, 2, and then 3, and then 4, and then 5. And then within this third wave, we also have 1, 2, 3, 4, 5, right? And then within this third wave, we also have another 3 waves, 1, 2, 3, 4, 5. So these are called fractals of waves. And these fractals are found in every single time frame, whether it be 3-minute charts, 1-minute charts, 5-minute charts. We can always see them. So let me draw where I think we are in the Elliott wave process right now. Firstly, I wanted to make note once again that wave 3 is often the longest and never the shortest, right? So we're just going to draw some of our targets here first. I'm going to take that one with Fibonacci Extension. So if you guys don't know Fibonacci Extension, you go to trend-based Fibonacci Extension, you choose the point where it's bouncing right off of the 55 EMA, choose the next highest point, which is right here, and then choose the absolute lowest point, okay? So the lowest point is about right here. So I see a 1-to-1 extension right here, and that is the first target. Guys, believe it or not, this is absolutely still the first target. And I do believe that we're going to hit it, and let me show you why. So right here, I'm going to draw a green box so everybody can see it. $1.80, $1.81. So why is it not hitting it right now? I will gladly explain why. So we're going to choose a point such as right here first, because these are still corrections. So I'm going to choose this point, and this is why. I see 1, 2, and I see a larger third wave there, 4, and then I see a fifth wave right there. The third one was an extended fifth wave to me, and then I see an A, B, C correction in here. A and B and a C, which actually is perfect because it made a pretty much a 1-to-1 measured move. So because I see this right here, now this makes my point 1, and this makes my point 2, which I will label for you as well. 1 and 2. Now what is all of this in here? Because wave 3 did not hit the 1/6 or 1-to-1 Fibonacci extension ratio yet, which is right here, and according to Elliott wave rules, it means that this is actually not even close to finish yet. And I will explain why. So for example, right here, what we see is a pretty cool structure, right? Pretty cool structure, I would say. Let's analyze this on a 1-hour time frame. Let's do it wave by wave. And these might seem arbitrary to a lot of people, but I assure you that it's not arbitrary what I'm doing. This is after reading maybe, I'd probably say 10 books now on Elliott Wave, which are 300-400 pages long, and reading lots of different guides and seeing lots of examples. And so it's really hard to explain if anyone will ever ask me, how am I drawing my Elliott Waves, right? It's, you know, imagine reading a lot of books, right? And then you just kind of get the idea by lots of experience and practice. So what I would recommend if people are interested in learning how to do this is definitely pick up a few books, right? You can just Google Elliott Wave books, and I'm sure a lot will come up there as well. So this is 3. Actually, I'm jumping the gun here a little bit. We can go to 1. We're going to go to 2. And this will be 3, 4, and that's 5. So this is going to make my first whip substructure right there of 1. 1. Then we're going to look for basically an A, B, C correction. This is pretty much going to fit it to me. A, B, and a C. So this will make my second subwave right here. 2. Now I'm going to look for another 3 going up. I see 1 here. I see 2. I see 3 right there. 4. And a very extended fifth wave right here. That is a pretty big guy to me. So I will call this one 3. And then you don't see it on this time frame, but I assure you it's there. This one will be counted as A, B, and C. And this will make the fourth wave coming down. And now we're going to get the fourth wave right there. Now the fifth wave is the complicated guy right here, okay? It's going to be counted like this. 1. We're not gonna include the wick. 2, 3 satisfies my rule where the wick only pokes through of it. It doesn't overlap the territory of wave 1. 4 and 5. And now what we have is a beautiful Elliott wave. 5 exact impulse moves up. 5. How does that look? I think it looks beautiful right now. And charting this, guys, takes time, so be patient, okay? If you would like to learn Elliott Wave, be very, very, very patient and take the time to study, okay? Someone wrote on Steemit, which I will show you guys really quickly. He wrote on Steemit on one of my accounts here, or in one of my blogs. He wrote, he wrote something like, wow, I'm still going through your videos. There are over 5 hours. Very informative. I just wish there was a summarized version, like a recap video. And I wrote to him, don't ever want a summarized version. There are no shortcuts in trading. It's highly dependent on how much time you put in and how motivated you are to learn. This is an incredibly difficult profession. One must put in extreme amounts of time and hard work. For example, I'm an engineer and math major. There are no summarized degrees to obtain in university. And I truly mean that, okay guys, that there are no summarized versions of shortcuts in trading. You either put in the hard work or you just don't learn, right? It's one of those jobs that requires a lot of motivation and self-learning. And sure, I can summarize an RSI video for you guys in 5 minutes if you'd like, but are those 5 minutes really going to help compared to a 1 or 2 hour video that's going to detail exactly how some people think and the strategy behind RSI using very advanced methods? Do you guys know what I mean? I hope that really makes sense, okay? So when people ask for a too long, didn't read, can you summarize it? I usually don't even respond because, you know what? I don't think those people are really serious about learning, and I'll absolutely dedicate a lot of my time to the people that are putting in the hard work, right? If you're putting in the hard work to search for what to learn and you're asking good questions, right? You're asking, because there are such thing as good questions and bad questions, right? There are no such thing as stupid questions, don't get me wrong. You should always be asking questions, but you should also be wondering what are the right questions to ask. How can I search for information? Have I done due diligence as well? So you have to make sure that you guys are putting in lots of hard work, because I hate to say this, but in trading, there's, you can pay for a course if you'd like, and they'll gladly walk you through everything and give you a syllabus. But I don't think that that's the right way to learn, because those people or those companies, they will cater to only one specific style of trading, and they don't accommodate for the fact that people will learn differently, whether it's through visuals or they'll learn through hearing, right? You're either a visual learner or you're an audible learner. So for myself, for example, I'm better when I learn through taking down notes and listening at the same time rather than just watching. So definitely put in the hard work and the time, guys, if you would like to learn how to do these Elliott waves. So when people ask me, how did you do that? It doesn't make sense. I would just recommend to read a lot of books, because then it'll make a lot more sense, right? So now that we have a beautiful 5-wave count, 1, 2, 3, 4, 5 there, don't worry guys, my humor is going to pick up in like less than an hour or two. I didn't really get too much sleep last night because I'm in a massive position for Ethereum. I had my run of luck with Ethereum when I bought 200 back earlier, actually like a year ago, right? So I decided to buy 200 Ethereum last night. Yeah, I bought 200 Ethereum with a base price of $309. That's about $65,000 worth. And it's gone up already, right? It's gone up quite a bit already. So I'm in a fairly large and almost uncomfortable position to me, because that's not the way I trade, right? I don't put in $50,000 in one position usually. For a very confident trade, I'll maybe put 20 to 30 at most. And then for my day trading positions, what I'll do is I'll maybe put 5 to 10,000 at most, right? Just to keep it within my comfort level, because I believe in small profits and small quick profits rather than large profits over time. It just depends on the type of trader that you are as well. So last night I was having a lot of dreams about Ethereum just hitting my stop loss like at $270. It's like, oh, I think I woke up like 6 or 7 times just checking my phone, right? Wow, is this a dream or is this really happening? Am I getting stopped out right now? Oh, geez. It's incredibly stressful sometimes, guys, when you see your account swing, you know, for example, $10,000, $20,000 at a time with large positions, and it can happen, right? So last night when I went to bed, it was at $340, right? So I was actually up $30 on each coin, right? So 30 times 200 is about $6,000. But I was having dreams of it going down to $70, right? Which is a $40 loss. $40 loss on my position. So 40 times 200, I was down like $8,000. And of course that never sits well with anyone, right? But surely enough, when I woke up, it was only at $330. So it's still up $20, which is still a good $6,000 right now. Jeez. But whenever I enter big positions, I get heart attacks, right? I'm a very anxious type of trader. Not that I factor in emotion, don't get me wrong, but when you see your account swing, right, and you stick to the position or the style that suits you best and your personality. And the style that suits me best is day trading, playing heavy and volatile markets. And at the same time, I keep my position size fairly small, between 5 to 10,000, and I will make those 1 to 2% gains, you know, all day, right? I'll make those $100 gains a day, maybe 10 times a day, for example, to make a good profit at the end of the day, rather than just sitting in one large position and being anxious. I do not like exposure whatsoever. Exposure means how much time you are in the market. So yeah, so I will hold long-term positions like IOTA. I hold a very large amount as well. If you guys saw my video that I released on November 8th, they're urging people to buy at 35 cents, and it's now at 60 cents, right? So I'm holding almost as much IOTA as in Ethereum right now, and that's giving me a little bit of a panic attack here and there, right? But I'm very up. I just don't like to see it swing wildly like that all the time. So anyways, I just want to give you guys a little bit about me every few days, you know? So that is a beautiful 5 waves, right? 1, 2, 3, 4, 5 to make 1, ABC to make 2, and then we have 1, 2, 3, 4, 5 with a huge extended 5th wave, ABC correction there, and a 1, 2, 3, 4, 5. And this is basically a huge ABC correction to me, or WXY, however you want to see it. We're just going to pretend this was an ABC like that, just for simplicity's sake, okay? Just for simplicity's sake, we'll call it just like that. And now, where are we here? That is the big question. So the way I see this right now is like this. I see this as my wave 1, 2, 3, and 4 actually retrace to the same territory of wave 1 there, but that's all right for this particular rule because it's more so making an expanding diagonal is what they call it, okay? This is an expanding diagonal, and that's an expanding leading first wave. That's usually what it's seen as. So I'm just going to draw this with a few different lines so we can be very clear about that. Once again, that's called an expanding diagonal, so definitely check out the term if it's not too familiar. And then we have our first wave up there, right? And our second wave right down to over here, where it made a simple ABC corrective pattern. Now, what's cool about this right here is we can check the Fibonacci retracement. We can use our Fibonacci tool. Just go from this point right there at the bottom to that point up there. I'm actually going to get some more numbers in here. And what we notice right away is that from this point to that point there, Wave 2 retraced only, oops, 786, which is actually a really good sign because it will imply that the next wave up right here will actually not retrace much whatsoever, okay? Now this is where I firmly believe where we are right now in this process. So check this out. There are two different ways to interpret it. First of all, I want to make note that, remember how I mentioned earlier that this is 5 waves, right? 1, 2, 3, 4, and let's say it's 5. But within this wave, there could be 5 waves. 1, 2, 3, 4, and 5, just like that basically, right? This is the way that I view this right now. And based on Elliott wave theory, because our one-to-one extension did not hit 1.80 yet, I'm led to believe that we are still, guys, in a very large first or third wave right here. And there are two possible scenarios where we could take a look at this. And let's go through both of them. So the way I mainly see it is like this right now. I see it as this is 1, a small one, this is 2, and this is a huge third wave right there. Huge third wave. I do believe we're going to come down and touch this area, and then finally we're going to go back up and hit this exact area. This box right there, where we will finally complete our one-to-one extension. Now if I count my waves, it makes sense. I don't want to analyze this first one right there. Too small of a time frame to me to get into detail. But I will count this as the first wave in here, the second wave there, and all of this is the third wave up there. This is an extended third wave in there. So what makes sense to me is for me to label it like this right now, where this is 1, this is 2, and this right here is 3. I'd probably say this one is 3, this one's 4, and this one is 5. That makes a lot of sense to me. There's 5 subwaves in there, which I won't get to. This one here didn't really retrace much. It retraced about not even 382. So we can expect this one here to retrace much more heavily, and let's see if it does. This one should retrace, I'm guessing 0.5. And yeah, it does retrace 0.5. So it fits my criteria for this one being the fourth wave down. Perfect. So this is what we would call an extended third wave. It doesn't really happen often, right? But because there's so much bullish pressure that it ends up forming a lot of waves in there. Or you can even see it like this as an example. Let me show you. You can see this one as the first wave in here, very small. And this one as the third one. This could be the fourth down here. And this could be the fifth, right? So we're seeing 5 waves within this third wave right here, which makes a lot of sense to me. And then the fourth wave down, we get the ABC correction just like that. A, B, this one was amazing to watch, ABC like that. And here, if we look at it very closely, we will also see 5 waves, right? We see 1 there, 2, and 1, 2, 3. This is 4, and this is 5, which makes the top. And that is a beautiful 1, 2, 3, right up there. Keep watching these Elliott Wave videos over and over, guys. I will do 100% my best to explain it very thoroughly for you guys, because I want you guys to understand Elliott Wave. It is my absolute favorite way of analyzing. In fact, I'm so obsessed about it, guys. I went to Shoppers Drug Mart to buy new toothbrushes for myself, and I bought like this value pack by Colgate. And you know what? It was called the Wave Zigzag on my toothbrush. If you guys saw it in my tweet there, when I brought it home, I was like, what the heck is going on? I'm seeing Elliott Waves everywhere. I just can't stop thinking about Elliott Waves. And it was just amazing to see how Elliott Wave can be incorporated into everyday life. So because I see wave 1, I'm starting to wake up now. I'm starting to feel very perky. I just gotta get my coffee soon. This is wave 1, this is 2, this is 3. Now that we've rationalized it, guess where 4 ends up? 4 ends up right in this buy zone again, I'm guessing. Right in here. I think that's going to be the perfect one. This is going to be a really nice buy zone for people to get into. I don't know how far exactly it will retrace to, but I think that we're almost there already, guys. It looks like we're doing a 3. Wow, we're actually almost there. Check this out. A, B, that's 1, 2, 3, 4, and 5. We're going to land right here. This is a 3-wave substructure. It lacks sufficient downward force is how they describe it in the book, because there's so much bullish momentum. So this is making a 3. I'm going to zoom in so we can actually see it, right? Where it says making a 3, 3, 5 pattern. 3, 3, see this right here? 1, 2, 3. This one right here is making the perfect substructure as well. The impulse up, it's making another A, B, C in there. If we zoomed in very close, we can actually see 5 tiny subwaves, I'm sure, in here. Let's see if we can do that. Yes, we can, right? We see 5 subwaves as well. We don't see it in the larger time frame, but here we also see basically 1. Yeah, I'd probably call that 2. I call this 3, and so that bounces up there, and 4 and 5 right there, where it doesn't quite reach a lower low than it. So that makes a lot of sense to me. Or if that doesn't make sense, then we can even keep in mind this is on a 3-minute chart, right? So it's kind of silly to be analyzing the 3-minute chart, but I just want to give you guys an idea that we see 5 waves in there. Yeah, this makes a lot of sense to me right now. I'm definitely going to play this soon. So I see, yeah, I'm going to go to a 30-minute chart. That's a lot easier to play with in here. All right, so we see, sorry for the mess there. 1, 2, 3 to make A, 1, 2, 3 to make B, and then now we are seeing definitely 5 waves soon, guys. 1, 2, 3, and not only are we seeing 5 waves, but we're seeing 5 perfect waves, guys. We'll call this point right there 2. Let's call this one 3, 4. We might even be it right now. This is like double bottoming out almost, right? So I'm guessing it might even land up somewhere between 50 to 45. So I'm definitely going to increase my buy zone to somewhere there. So what I will do is I will be stacking my buys. And you guys always hear me use the term ladder. I always like to ladder my buys. So I'll take resistance there. I'll probably go there as well, here as well, and here as well. So instead of buying everything, guys, if you saw my older video where I'm explaining risk reduction techniques and laddering in there, I buy slowly. I'll put a limit order here, I'll put a limit order here, 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 and here as well, right? I'll maybe buy like 1,000 or something at a time, because I don't want to buy in one position. I want to slowly accumulate, and hey, if it ends up being the actual bottom, then I'll put in a bigger order and I'll buy into strength, no problem. But you guys have been in the position before where you buy everything in one position and you're seeing your account swing wildly, right? And it's really not a good thing to do that. So what I would recommend is to buy very, very slowly. So now that we have our wave 4 coming up here, gentlemen and ladies, right? We have our 1, 2, 3, 4, where we've analyzed it to death. And now, guys, we are going to get our 5th wave into this green box soon, I promise you. Watch, we're gonna get it, guys, and you guys are gonna be thankful that we got that. Okay, we just gotta break this previous high, and then there was a resistance right here. I don't want to zoom out too far, actually. This was a previous resistance right here. Once we shatter it, we're gonna go for this 0.8 Fibonacci level right there, guys. The Fibonacci extension level right there. And what could actually happen is we can get a very extended 5th wave if the market is incredibly bullish. So after evaluating it further, if you guys saw my video, I predicted $1.80, right? When we were still in this specific region right here, yesterday's video, we're $1.45. Even though I got my ABC corrective pattern wrong, that doesn't matter in the least, guys. All that matters is that I pretty much nailed it. We got to $1.73, guys, $1.73.45, and I said yesterday, 16 hours ago, that we were going to hit what price? We were going to hit $1.80, okay? I'm 7 cents off. That goes to show how accurate my analysis usually is. So don't be scared, guys, that we're only 7 cents off right now. After we rationalize everything, 1, 2, 3, 4, we have a possible fifth wave right to here. And it's going to happen whether you guys are in it or not. Now, the beauty is if we get this wave right here. I'm hoping for this wave right here. I actually closed my position already at $1.70. I was very happy to do that. Now I get a chance to buy more at $1.53, which is going to be amazing as well. This one here, if we get an extended fifth wave, it is going to be a beautiful thing, guys. A beautiful thing. And now this could be finally our fifth wave or our fifth wave up there. So these are the targets still. It didn't change at all. And I was able to extrapolate all this information, gentlemen and ladies, only from right here. From this point here when it was $1.40, I've been able to extrapolate all this information thus far, and based on Fibonacci targets, this is where we still stand. A really good buy zone, if it even reaches here anymore, it would be around $1.51 to $1.42. Who cares what you guys get the price at? You don't have to always buy at the bottom. You can always be laddering. So guys, first target, keep this in mind, okay? $1.80, $1.80. Second target, $2.35, okay? So this is how we're going to approach it, and I'm going to write it out for you as well. So let's say you entered a position right here. We'll just say $1.53, sure. You're going to target this box. You're going to set your stop loss, say, slightly below this area here. And now you got a beautiful, beautiful risk to reward, which I will also write out. Risk to reward. And the risk to reward is, what was it again? 2.2. Risk to reward 2.2 to 1. The entry price is between $1.45 to $1.53. Target 1 is equal to $1.81, or say 80. Target 2 is equal to $2.37. Stop loss, $1.38, we'll say, $1.38. Probability, high, 60 to 75%. And chance to gain, 18% to 18 to 54%. 18 to 54%. 18% to 54%. How does that look so far? Does that look like a good trade setup? I'd say it's pretty darn good, right? Absolutely. That's a very, very good trade setup, okay? If you guys took this risk to reward ratio to give you a flip a coin scenario, which I always incorporate now, a coin scenario. I always have to say scenario to write it out, otherwise I spell scenario, N-E-R, I don't know why. So out of 10 games with RR, 2.22 to 1. So let's say you won only 40% of the time, lost 60%. So each win is equal to $22. That's what 2 to 1. We'll say 2 on 22 just for the sake of it. Actually, we'll say big number. Loss is equal to $100. So this is over 10 games. So now 4 wins at 222 is equal to $888. 6 losses at 100 is equal to 800. Okay, you're still gonna profit. Oh, sorry, not 8 losses, 6 losses I meant. Now your profit is equal to total wins, win profit minus your lost profit, which is equal to $888 minus $600, and that is equal to total profit is equal to $288. So that's the flip the coin scenario where you're playing 10 games, and out of 10 games with the risk to reward of 2.22 to 1, each win with a 40% win even. So even if you lost 6 out of 10 times and you won 4 out of 10 times, with a 2.22 to 1 risk to reward ratio, let's just use a round number of $222, each loss is $100. So 4 wins at $222 is $888. 6 losses at $100 each is equal to $600. So now the profit is equal to your total wins minus your total losses, and you're still going to be very profitable. So is this a really good trade to take? Absolutely, it's a great trade to take. How far down will it go? I'm not exactly sure, but the fifth wave, everybody, please remember this, that the C always makes a 5 waves, okay? Now, I don't know if this is 5 right here already, 1, 2, 3, 4, 5, but that doesn't fit my requirement because it's overlapping there. So what I'm going to do is treat this as 1. Actually, no, I can't even do that either. Yeah, it's going to be an ending diagonal. It's going to overlap. This could even be the 5th wave right here already. If that's not the 5th wave coming down, always 5 waves in the C. Then this could be 1, that could be 2, 1, 2, 3, 4. This could be 3 down here. This could be 4, and this could be 5. Either way, this is the buy zone right here. $1.42 to about $1.41, which I've indicated in here. I will screenshot it, and I will also put it on my Twitter for everybody. This is a fantastic risk to reward setup, and I highly encourage everybody to consider it. I'm not a financial advisor, keep in mind, all right? What I do is I beat down these charts, as you guys know. I beat down these charts with numbers and probability and Elliott Wave, and I make sure that I see, or I try my best to see what could be going on. So that is what I think will happen. Let's hope that I am right. First target is still right here, everybody, $1.80. Second target, $2.37. This is definitely going to happen, and I hope that the people that have taken or have seen my previous EOS video yesterday, congratulations to everybody that got in around this zone. It was, I mean, the people that got in, guys, you guys made bank yesterday, man. You guys made 20% profit. Like, that's crazy, guys. I bought in $1 at this bounce right here because I was too busy doing other things. I actually bought in like around $1.55 or so after it started to break out because I confirmed it wasn't a B correction. And I still made a huge profit on it. I sold at $1.70. Sold at $1.70. I still made a 12% profit on a $10,000 position. So that was an easy $1,200 for me yesterday, which goes straight to my dog. She's got her own cryptocurrency piggy bank. So that is it, guys, for this video. I apologize if it was long. And knowing me, like I mentioned at the beginning, I say it's going to be 10-15 minutes. But I need to be thorough. I need to be thorough for the people that are interested in learning, that are interested in getting through or getting inside of the mind of a trader. And I'd say I've been doing it fairly well because I'm doing pretty well, pretty happy in life in general, can't complain. I take high probability trade setups and I'm very successful over time. And I can definitely manage my risk, which I suggest everybody to do as well. Focus on risk management, write out these kind of flip a coin scenarios over 10 games. Every trade I take, guys, I write this out for myself. This is not for you. This is for me. It's for me to understand what kind of entry price, exit price, stop losses, how much I have a chance to lose, okay? So chance to gain that much. I forgot to write how much chance to lose. Chance to lose 9%. Okay. 8.5. Actually, we'll just round it up, 9%. So I hope you guys enjoyed this video. I apologize once again if my sense of humor hasn't perked up quite yet. I just got to get my cup of coffee or my crack cocaine, one or the other. Okay, that's a joke, guys. That is a complete joke. Please don't take that seriously, okay? Complete joke. I do not I do not advise ever do anything like that, okay? Just a complete joke for the people who thought that I was serious, because that's a no-no, okay? So if you guys enjoyed this video, please like it. I'm trying to get a lot of subscribers to help you guys and to help out the cryptocurrency community in general. And I'm trying to produce amazing content that will always be free. I will never charge you guys for anything and create some dumb course that you guys have to pay thousands of dollars for. Everything is free. If I put in the hard work to produce these videos, then you guys also have to reciprocate that hard work and definitely keep studying, okay? Keep studying every single day and look at my analysis, look at lots of people's analysis, and constantly learn and develop and refine your skills, all right? So if you guys liked it, like it. Share it. Share this video if you liked it as well. Go see my Bitcoin cash prediction where I hit 2,800. I predicted $2,800 and it literally hit $27.99. Make sure you see my Ethereum video where I predicted a huge breakout from $310 and Ethereum is now at $335 to $340. Go see my IOTA videos as well where I recommended a strong buy at 35 cents. We're at $60 now, guys. Amazing videos that I'm trying to put out for you guys, and these are not just voodoo skills by drawing lines in a chart. It comes with a lot of experience and practice, which I would like to share with all of you guys in the cryptocurrency community, because I do believe that this is a competitive environment, but we always have to share what we know. You know, everybody says who advances to a different level in their life, right? They always say that once you have done your part in life, you teach and you share what you know, because that's what we have to do as humans, and we have to believe in the human spirit of sharing, because knowledge is power, right? So like, subscribe, share, follow me on Twitter as well, okay guys, and upvote this on Steemit. I would really appreciate this Steemit. I'm trying to also build a big following on there as well, because hey, Steemit community is a huge community and I do believe in that coin, and I will absolutely be investing in it soon as well. It's like a better version of Reddit that actually pays people to post, and you guys also get paid as well when you're writing things on there. And if you absolutely loved it, make sure you guys donate to my Luna's cryptocurrency piggy bank fund, right? You guys all know Luna, the dog that howls every so often, and she's guest starring whenever I visit my folks there. So make sure you guys like, subscribe, share, blah, 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 donate to my dog eats piggy bank, and have yourselves a great day. And I will all see you guys at $1.81. Bye now.